So yesterday, the Fed came out and said that they're going to hold rates down near 0% until full employment is reached. We've also received data that home applications have risen 12% week over week, but at the same time, pending home sales were down nearly 20% in March. Today, we received information that jobless claims hit 3.8 million for this week, and that puts us over 30 million over the last 6 weeks. So what does all of that mean for you as a homeowner, as a buyer, seller, or investor in today's market? That's what we're going to break down today. I'm Jeb Smith. I'm a real estate broker here in Southern California. Thank you for taking the time to watch. If you've been here before, welcome back. If you're new to my channel, if you like all things real estate, do me a favor, hit that subscribe button and give me a thumbs up if you like this information. So what does it mean that the Fed has decided to hold interest rates near 0% until full employment is reached? It basically means that we're going to have low interest rates for an extended period of time, right? It's not going away anytime soon. So, as part of the stimulus package, the unemployed have received an additional $600 per week on top of their normal benefits. So there's a lot of people out there right now making more money off unemployment than they did when they were actually employed. So you're going to have a lot of people that are going to hold on to this, right? I think it was 39 weeks or so that that additional stimulus is being generated. So, there's going to be a lot of people that are going to stay unemployed that aren't going to go back to work. And then you're going to have some people that are truly unemployed that even if they wanted to go back to work, can't go back to work because of whatever situation. So now, does that mean that the interest rate that you pay on your mortgage is going to go down to 0%? No, that's not what it means. So we're talking about the Fed funds rate here, which is more or less the overnight borrowing rate that banks borrow from each other. But where it does make an impact is if you have student loans, if you have credit cards, that sort of thing. That's where where you're going to see the effects. You're going to see the benefits of interest rates staying low. It's the ability to borrow money at a low interest rate. So, if you're a business and you're looking to borrow money from the bank, that sort of thing, that's where you'll see the benefit in the interest rate staying near zero. But what should happen in theory is this should translate to lower interest rates. Now, the two aren't directly tied to each other. But in theory, as the Fed funds rate historically has gone down over time, so have interest rates. So, Fannie Mae came out this week and said they predict interest rates are going to drop below 3% in the near future. That's my guess as well. So, if you've already refinanced, I would tell you to continue monitoring, interest rates, because you might be in a position to refinance again, especially if it gets down into the mid twos or even low twos for that matter. If you haven't refinanced, get your paperwork into your lender, whoever that is, and ask to monitor rates. Ask them for updates so that you can stay on top of that. So if you're in a position to refinance, you can take advantage of it and don't have to worry about getting all your paperwork in and locking a rate all at the same time. That way you can just lock the rate when it gets down there. And I've talked about that in other videos, but I'm stressing it here because it's important. Now, another thing we received this week, as I mentioned, is home applications have risen 12% week to week. What does that mean? Basically means, and still it's down year over year. So we're still down, I think, 20% or so from where we were at this point last year, but we've risen 12% week over week. That's important because it shows that people are, not as fearful as they were a couple of weeks ago. People are starting to get back into the market. They're starting to look at houses. I'm personally seeing it on my end as a real estate broker here, that has listings, that works with buyers. I'm getting more people reaching out to me to look at property. I've had deals that have fallen out of escrow at the beginning of this epidemic that are now back in escrow because we've received offers within the last couple of weeks. So there are people out there looking. More people are starting to get back into the market. So that's what I'm seeing. Now, that doesn't mean the market's going to go gangbusters in 6 weeks, but what I will say is based on that activity, it shows that people, are still trying to find the right house. So, if you're a seller, keep that in mind right now, right? There's not a lot of inventory. Not a lot of people out there have their homes on the market. I think our inventory levels are back to 2006 levels, which means, we have a very, very, very low supply of homes. So as a seller, it could be a good time to put your home on the market because you have less competition. Same thing as a buyer, right? We just said interest rates are really good. Could be a good time to purchase a house, especially if you're going to be in there long term, because there's less competition, right? Where there might have been 20 offers on a house 2 months ago, there might only be 2 now, or maybe you're the only one. So take advantage of that. Now, they did say, or I did say earlier in the video, that pending home sales are down nearly 20%. I talked about this in a video that I did just over a week ago. That could be one of two things. It could be the fact that, we had this epidemic and people just stopped looking. They got scared. They said, I'm not willing to buy a house during this time or buy a house at all, so I'm taking myself out of the market. Now, a pending home sale is more or less when a house goes into escrow, right? That's what we're looking at for pending home sales. Now, the other side of that coin could be the fact that we have such low inventory that people aren't able to find the right property, therefore they can't go into escrow. So, don't just assume that it's all because of everything going on. There's a lot of people out there that haven't been affected employment-wise. And, they were looking at houses before this and they're looking at houses now. So, there's still an opportunity in every market. And again, those that haven't been affected, are the people that will definitely come out of this first and probably the strongest. So, I can't say directly why pending home sales were down nearly 20%, but, the fact that home applications have risen 12% over the last week tells us that there are buyers out there looking in the market. Now, I mentioned jobless claims hit 3.8 million this week, and that puts us over 30 million filing for unemployment over the last 6 weeks. Now, to be expected, right? There's a lot of businesses that have been trying to hold on, try to get stimulus money, whether it's through the SBA or, the PPP loans. And, some of them got it and are able to hold on. Some of them haven't gotten it and have had to continue lay off people and what have you, right? So there were a lot of people holding on to employees because they didn't know when this was going to end. They didn't want to furlough people. They didn't want to lay people off if we were going to come out of this in 4 weeks. Well, right now we know that that's not going to happen, at least here in California, right? We have this whole measure that came out this week and these steps that, we have to reach certain measures in order to open certain businesses, et cetera. So there's a lot of people going, whoa, we don't know when this is going to happen, so we're going to have to lay people off. Now, I don't think these numbers are crazy. I think it's somewhat, to be expected, but a lot of these people are in positions where they'll get rehired at some point in the future, but some of them, the retail businesses, the restaurant, some of those businesses won't reopen, right? So there will be people affected by this, and so it's hard to say how all it's going to play out. But what I will say is based on the current fundamentals, if you will, of the market, which is very, super low interest rates, probably going lower, low supply. Those two things are what creates a perfect real estate market. And what I mean by perfect is a real estate market that goes sideways to up, right? Those are markets where you get appreciation. And that's what we're experiencing now. While buyer demand is low, it's somewhat to be expected, right? I mean, it's not like, this has been, there's been faulty loans and people have foreclosed and all of that, and that's caused any of this stuff to happen. It's truly one thing that caused this, and so as this thing passes, those people will come back to the market. In theory, assuming they're in a position to buy, and that should translate into people buying and selling real estate. Now, a lot of people are like, hey, big foreclosure waves come in, the market's going to crash. I don't see that happening, right? I don't see foreclosures happening because of the amount of equity people have in their homes, right? There's a lot of people with a lot of equity in their property because we've had so much appreciation year over year for the last 8-9 years. At the same time, it's with the CARES Act giving people an opportunity to use forbearance and to be able to skip mortgage payments, not skip them, but pay them at a point later in the future. That also helps those people not go into foreclosure, right? So I don't see a big foreclosure wave coming. Clearly, there will be some, right? There will be some people that don't make the call to their lender and just think this is going to go away, or not make the payment, when it's due in the future, or what have you. So you will have some of those people, right? It's of course, but I don't think you're going to see the majority of people do that. And at the same time, the the market crash coming because of all of this stuff. I don't see that either, right? The basic fundamentals of the market have been good for we were heading to have our best real estate market of the year in January and February. I mean, the numbers were awesome. I mean, the demand was there, inventory was low, interest rates were low. And so as we transition out of this, assuming all of that stays the same way, I think the market will continue to move. Now, do I think we're going to get a 10% appreciation year over year? No, we might see a little dip in prices. We might see, some people holding off the purchase. But again, it's somewhat to be expected. I think if you're looking out over the next 2 to 3 years, it's a good time to buy a property, especially if you're going to hold on to it for the next 5 to 7 years. Now, again, I'm not here to convince you to do anything. I'm just trying to provide you with reasonable, ideas, if you will, or how I would talk to you if you and I were having a conversation about you buying or selling a house. So, with that said, if you have additional questions about the real estate market, want to pick my brain, want to tell me I'm crazy, whatever it is, that's fine. Do me a favor, comment below in the description. I do my best to comment back to everybody, to reply to everybody, to address all questions. And tomorrow we'll be back with my lender talking about, the real estate market and, what happened this week and how that might affect you as well. But, if there's additional videos you want me to touch on, do me a favor, comment below or contact me directly. I appreciate you taking the time to watch, and we will see you again soon. Have an awesome day. Bye-bye.